and welcome to the Q3 FY2025 results conference call of Borosil Renewables Limited, hosted by Axis Capital Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rohan Kiwala from Axis Capital. Thank you, and over to you, sir.
Thank you. Good evening, everyone. On behalf of Axis Capital, I am pleased to welcome you all for the Q3 FY25 earnings conference call of Borosil Renewables Limited. We have with us the management represented by Mr. P.K. Kheruka, Executive Chairman, Mr. Ashok Jain, Whole-Time Director, Mr. Sunil Rongta, Whole-Time Director and Chief Financial Officer, and Mr. Balesh Talapady, VP, Investor Relations. We thank the management for giving us the opportunity to host the call. We will begin with the opening remarks from the management, followed by an interactive Q&A session. Thank you, and over to you, sir.
Good afternoon, and welcome to the Borosil Renewables Q3 Financial Year 24-25 investor call. This is Pradeep Kheruka, Chairman. On the 14th of February, the board of Borosil Renewables approved the company's financial results for the third quarter of the current financial year. Our results and an updated presentation have been sent to the stock exchanges and have also been uploaded on the company's website. We will discuss the operations of the company on a standalone basis as well as on a consolidated basis. The total sales during the third quarter of the current financial year grew by 14% in volume over the previous quarter, but could achieve only a growth of about 3.6% by value to 275.28 crores, up from 265.61 crores in the preceding quarter. The price pressure came from a steep decline in average ex-factory prices driven by increased Chinese dumping at ever lower prices. These fell to about 105 rupees per square meter, which would correspond to about 42,000 rupees per ton, down from the preceding quarter's average selling price of 115 rupees per millimeter per square meter, which would work out about 46,000 rupees a ton. The EBITDA stood reduced at Indian rupees 20.89 crores as against Indian rupees 52.88 crores in the preceding quarter. The imposition of a 10% basic customs duty on imports from 1st October last year failed to make any impact on the landed prices of the imported glass because the Chinese cut their export FOB prices by 18%. Ocean freight during the quarter. Additionally, the company had to incur an expense of 4.59 crores on account of a non-routine repair. It also incurred a debit of expenses related to rights issue, which further impacted the EBITDA by another rupees 2.01 crores. Export sales, including those to SEZ customers, amounting to rupees 16.02 crores in the third quarter of the current financial year, accounted for 6% of the turnover, compared to Indian rupees 34.39 crores in the preceding quarter, when exports made up 13% of turnover. All the major export markets are showing lower demand due to reduction of local manufacturing as cheap Chinese modules dominate the installations. The decline in EBITDA has led to the company posting a post-tax loss of rupees 8.64 crores in the third quarter 24-25, compared to a profit after tax of rupees 12.62 crores in the previous quarter and a post-tax loss of Indian rupees 11.04 crores in the corresponding quarter in the last year. After a meteoric rise in September 2024, solar glass imports reverted to the previous, still exceptionally higher levels. Despite our customers being highly stocked up with extremely large volumes of cheap imported glass, our sales team was able to induce them to buy even higher volumes as compared to the previous quarter and was thus able to bring down the finished goods inventory during the quarter. Now, coming to perhaps the most significant development in the last quarter. On the 4th of December last year, the Ministry of Finance notified a provisional anti-dumping duty on imports of solar glass from China and Vietnam by virtue of imposition of a reference price based on the recommendation by the DGTR, that's the Director General Trade Revenue, which I had shared with you during our previous investors call. This has brought great relief to the company. Sale contracts already entered for supply in December were executed at the old depressed prices, and hence these results do not reflect the greatly improved business prospects of the company. Following up on the above, I am pleased to inform that the investigation now stands concluded and the DGTR has issued its final findings about the imports having caused material injury to the domestic industry, recommending the imposition of a definitive anti-dumping duty on all the imports of solar glass originating in or exported from China and Vietnam, as well as anti-subsidy countervailing duty on imports from Vietnam for a period of 5 years from the date of issue of the preliminary duty notification issued by the central government-wide notification number 26/2024 Customs ADD dated 4 December 2024. These findings have been published in the Gazette and forwarded to the Ministry of Finance for further action. The company welcomes this decision and remains optimistic about the imposition of final anti-dumping and countervailing duties by the Ministry of Finance. This measure will restore fair competition and create a level playing field for domestic manufacturers, further strengthening India's solar glass industry. Landed prices of imported glass reflected the full impact of the duties immediately with effect from 4 December 2024. The impact of the improved prices will get reflected in the company's financial performance with effect from the beginning of January and are expected to move near the level of the reference price during the quarter. Based on the prevailing rates of exchange, this would work out to about Indian rupees 140 per millimeter per square meter, which would correspond to about 56,000 rupees per ton. Solar glass industry is capital intensive with a low asset to turnover ratio, which is about 100:80. That means for 100 crores invested, we get 80 crores of turnover. Moreover, the company must provision a complete rebuild of its glass melting furnace every 5 years. As such, this level of selling price is essential for the domestic solar glass industry to be able to offer an IRR acceptable to long-term investors, ensuring the long-term sustainability which supports further expansion. The demand for solar glass remains buoyant. Manufacturing capacity for solar modules has already reached above 75 gigawatts, which is expected to double to 150 gigawatts in 2-3 years. The solar installations are also rising, as can be seen from the data for the year ended December 2025. We believe this year we will see installations of 25 gigawatts, which means module consumption of about 35 gigawatts as against 15 gigawatts last year. This rate of installation is expected to speed up in the coming years, and we may expect to see installations rising to 40 to 50 gigawatts annually going forward. Use of locally produced modules has risen sharply after the implementation of ALMM mechanism from April 2024, which has already led to increased demand for all the components including solar glass. Similar support is also being extended by the government to solar cell manufacturing by bringing in approved list of cell manufacturers, ALCM, with effect from the 1st of June 2026 and mandating use of locally produced cells. This will make the solar value chain stronger and more resilient. Present solar glass capacity in the country is 2,300 tons per day, which is about 15 gigawatts. Another 15 gigawatts is getting commissioned by the end of the current calendar year 2025. With a phenomenal rise in demand in recent times, imports currently occupy about 55 to 60% share in the consumption for domestic installations, leaving the scope for import substitution wide open. Immediately upon imposition of ADD, work on further 11.25 gigawatts has begun, including 3.25 gigawatts by your company. taking the total capacity to 41.25 gigawatts or 6,300 tons per day. We believe this step ensure creation of a dependable supply chain in this critical aspect of solar power. Hello? Now I come to the consolidated results for the quarter, which include the operations of the subsidiaries. A. The overseas subsidiaries, including the step-down subsidiaries, have generated net standalone revenue of 86.2 crores and negative EBITDA of 14.38 crore rupees for the third quarter financial year 24-25. The sales performance has declined over the preceding quarter, which had a net revenue of 107.4 crores, although the negative EBITDA was restricted to 16.85 crores. This was due to a slow demand and lower level of operations. The consolidated net revenue for the quarter under review stands at rupees 361.49 crores and EBITDA of rupees 5 crores as compared to net revenue of 373 crores and EBITDA of 34.57 crores in the preceding quarter. The considerable decline in EBITDA has arisen from the lower profitability of Indian operations, mainly due to the low selling prices as discussed earlier. While the German solar industry was waiting for the government to implement its promises to augment domestic manufacturing, the government itself went into crisis, leading to the call for fresh elections on 23rd February. Since no decision could be expected till the formation of a new government, we decided to cool down the furnace on 31st December 2024, thus temporarily pausing the hot end operations. During this time, we are continuing the processing of available annealed glass and partial operations. After formation of a new government post the ensuing elections, we shall await the policies in respect of the domestic manufacturing of solar photovoltaic modules. Until then, the bulk of the workforce has been put on short-time work, during which they are paid 2/3 of their wages by the government while they stay at home, thereby reducing the financial outgo from the company. Necessary cash flow support has been provided to the subsidiaries to meet the financial obligations. We shall observe the developments over the next 3 months and take next steps based on future possibilities. The EU Parliament has mandated that 25% of renewable energy generated must come from components and modules made in EU. We expect the new government to implement this policy. Our standalone results are expected to show a marked improvement in profitability in the ensuing quarters on the back of better selling prices going forward. Meanwhile, the company is seeing improving yield in its Indian operations as the team is getting to understand the new furnace better. We are making efforts towards minimizing the losses of the German operations by taking all possible measures. We believe there are good prospects for the German operations. I would like to update you on the preferential issue. The company received in-principle approvals from the BSE Limited on 4th February and NSE Limited on 3rd February 2025. Necessary documents were sent to all the applicants on 5th February to pay their application amounts by 13th February. The promoters subscribed to the shares for the entire committed amount of rupees 100 crores. I am pleased to inform you that despite prevailing market conditions, 91 applicants who have subscribed to 78,80,436 warrants and have paid the application money of 25%, totaling to 104.42 crores towards the issue amount of 417.66 crores, while the balance choose not to pay despite their applications. The allotment of shares warrants was done on Friday. The proceeds of rupees 517.66 crores, including the promoters' applications, will be utilized in due course as per the objects of the issue. Initial work on the expansion, 500 tons per day, has started, and we shall firm up the project costs and take steps to place orders for long lead items over the next few months. We expect to commission the new facility by September 2026. We remain positive on the sector and see good prospects for the company over the next few years, looking at the strong growth in the installations of solar modules and support from the government to ensure a level playing field for components. We remain technologically competent to meet market demand for the most important products. With that, I would now like to open the floor to questions that you may have. Thank you.
Thank you, sir. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles.
Meanwhile, the phone I'm using, the battery is dying. Could you possibly call me on my mobile phone?
Yes, sir. Could you give me your mobile phone number? Just give me
98210.
One moment, please. Yes, sir. Please go ahead.
98210.
Okay.
37435.
I'll call you up instantly.
Yeah, thank you.
Ladies and gentlemen, I would request you to stay online while I get the management on the call. Thank you.
At the tone, please record your message. When you have finished recording, you may hang up.
Thank you for your patience. The first question comes from the line of Sunny from IFA. Please go ahead.
Hi, sir. Am I audible?
Yes.
Sir, I have a question regarding you have recently raised 570 crore from the including promoter and non-promoter. So what is the capex outlay for 500 ton? That will be how much amount it will take to fund the capex?
So the capex on the 500 ton furnace was initially estimated at 675 crores. And out of that, certain amount out of these proceeds will be used for funding that. And balance will be funded from accruals and bank loans.
Sir, I have a follow-up question. You have cancelled the right issue of 450 crore and raised around 517 crore, out of which 100 crore have been issued given that for promoter itself. Why not you raised 450 crore from the minority shareholder and used all that amount for the capex, which was 675 crore?
Can you repeat your question, please?
Sir, actually, your original plan was to raise 450 crore.
Your voice is very low, man. Can you be louder, please?
Sunny, could you?
Yes, sir. Am I louder?
You need to come on your handset mode, Sunny, in case if you are on the speaker.
Am I audible, sir?
Yeah, please go better.
Sir, your original plan was to raise 450 crores through right issue. However, you choose to raise the fund using preferential issue, in which 100 crore given by promoter and rest 417 crore given by non-promoter. Why not raise the 450 crore from the existing right issue to use the further capex of 300 crore?
See, the right issue was going on, and in the meantime, we were approached by some investors that they can put in money by way of a preferential issue, and the amount could be larger. And around that time, this anti-dumping duty announcement was also made by the government. So we thought of combining the fundraise requirement from say 450 crore to almost 700 crores. So the thought process was that we meet all the objectives in one issue and don't go to market time and again. Finally, we all got less amount. That is another story because of the market situation. But while going for the preferential issue, the stock exchanges laid down the condition that you cannot concurrently run two issue of shares. So they wanted us to withdraw the rights issue. The right issue has already been withdrawn, so there is nothing in the right issue now. Whatever right issue 450 crore was there, it is gone now. It's withdrawn already.
I have another question, sir. So now that anti-dumping duty is on from 5 December...
Sorry to interrupt, Sunny, you're still not audible.
Sir, am I audible?
Yes, you need to adjust your handset a little bit, because there's a lot of muffling that's happening.
Am I audible, sir?
Yes, much better.
Sir, while I see that anti-dumping duty is effective with effect from 5 December 24, in the past we have seen that China used Malaysia for dumping the product via Malaysia to India. Are we seeing that in present scenario also?
See, until say the time the duty was imposed on China and Vietnam, the imports from Malaysia were barely anything. But as you rightly pointed out, when the situation changes, the duties get changed. The Chinese use their other territories to export to India. So there are exports which will come from Malaysia. But what we feel is that all the exports cannot come from Malaysia, first of all. And all the customers are not, in a position to get material from Malaysia. So there is a tremendous demand in India, and even if some customers want to import from Malaysia, that is possible that it will come at a low price. But on the other hand, this company is a listed company on the stock exchanges, the Malaysian company, and also they are also responsible for their profitability. They have been earning less income in the past, and they have certain plans to invest more money into the business. So what we have seen is that the Malaysia has already started quoting higher prices, although it is still lower than Chinese prices, but it will not be very cheap in terms of the dumping. So we expect certain pushback from the customers who would potentially be importing from Malaysia, but we have more customers to sell our goods to, so it should not be a problem.
Sir, on the next question, while on the approval from DGTR, Commerce Ministry has approved the anti-dumping duty, and how much it will take time for the Finance Ministry to recommend or approve or deny the anti-dumping duty?
So there is no fixed guidelines, I would think, but generally the time which Finance Ministry takes in extreme cases is 3 months from the date of submission of final recommendation by the DGTR. So from that perspective, we should expect this decision to be in the beginning of May at the most, at the latest.
Sir, any timeline for upcoming capex going live?
That is already covered by Chairman in the speech. By September 26, we will be able to commission the plant.
Sir, it will be brownfield?
Well, it is on the same location, so to that extent, like land and other utilities are available there. But we already consumed a lot of advantages in the past expansion. So there will be certain benefit of the brownfield expansion, but it will not be significant. Okay. Thank you, sir. That's it for my side.
Thank you. The next question comes from the line of Bajrang Bafna from Sunidhi Securities. Please go ahead.
So really wish you all the very best for the the anti-dumping duty that has been put up by the government and which will definitely change the fortunes of this industry. So just to get a sense, sir, we see there are multiple vendors or the multiple competition which is going on aggressively in India as far as modules are concerned, or maybe the sales are concerned. We are getting a figures of next 2-3 years will have the capacity to the tune of 150 gigawatt for the modules and close to 70 to 80 gigawatt for sales. But when we see the similar thing for glass, where we are active, even you have covered in your opening speech that 6,300 tons per day capacity, something which is envisaged, and that will support close to 41 gigawatt of solar capacity. So still there is a huge gap, between the capacity which is getting built up on the sale side or maybe for the module side in India. So just your sense on that where from the additional demand of glass is going to be met when these capacities comes on stream maybe 2 or 3 years down the line. So some sense on that, and our competition, apart from you and Visakha, which are the two major players, any other competition that is, coming up in that space will be really helpful, sir, to understand.
So you're right, the capacities of module manufacturing are expected to rise to 150 gigawatt. But when we talk of that capacity, it is a nameplate capacity. Actual utilization, what we've seen is that it is close to 45-50%. So we can assume that the actual utilization is not likely to exceed 65-70 gigawatt in that sense. And similarly, the solar cell capacity, if it is at 70-80, it will match with the module production and the requirement of solar cells. But in the case of glass, actually the industry is heavy capital intensive industry, and the time to commission the project is longer than like the module industry. In module industry, one can commission probably in 6 months to 1 year, but glass industry takes 18 months to 2 years time. So in the past, no fresh investments have been made by the players because of the absence of anti-dumping duty from 2022 till now. And now that the investments are starting, it's just a beginning that the capacities are rising from 15 gigawatt to 41 gigawatt, which itself is very, very good number. But I would imagine that with the current reference price under the anti-dumping duty, you may see more investment coming into this sector, and the demand can be made by local production itself. In any case, the imports are available for somebody who wants to import, and if there is a deficit in the domestic production.
I may add something here. I'm Pradeep Silka here. The thing is that we are seeing about an expected 25 gigawatts of installations in India this year. And if the next year it goes up to even 45, that'll be a very, very big jump. All right. And when we talk about capacity here, there's a lot of glass, there's a lot of modules going abroad for which nobody will use Indian glass, that they will buy imported glass under advance license at lower prices. So I do not see any mismatch arising, assuming even that 45 gigawatts of modules are manufactured. We should find the glass in India. As I mentioned, by the end of this year, the glass capacity is expected to rise above 40 gigawatts. Thank you.
Okay, got it, sir. And sir, if we assume that the ruling prices goes into a stream, let's say this 56 rupees a kg sort of realization as compared to 42 now after the ADD, and the channel checks are indicating that already the prices are rolling up closer to 50 rupees a kg right now, and very hopeful of going to, let's say, closer to this 55, 56 numbers maybe 2-3 months down the line. So what sort of margins, are possible once the realization becomes 55 rupees? Are the additional advantage, will be directly boiled down to the EBITDA numbers, or can we also expect some sort of cost increase, when the prices goes towards this 55, 56 rupees a kg number?
There should be no room for cost increase. Yeah.
Yeah, broadly it will add to the profit only because it's a selling price which is going up, and it does not have any bearing on the cost at all. I mean, in terms of additional cost. So it should all add up to the increment in the EBITDA margin. And we believe that margin at this price, even if we realize at the full 56,000 rupees, could be near 30% or so.
Okay, so this 30% is something which is sustainable provided we get this 56 or 55 rupees a kg realization.
Absolutely, yes.
Got it, sir. And just, sir, at these realizations, are you also anticipating or planning for further capex? Because as you pointed out that this capacity might be sufficient for FY26, this 40 gigawatt, and the current domestic requirement will be closer to that. And maybe in 27-28, again, the demand is going to be far higher. So the existing players, since there are huge entry barriers in this, the existing players need to ramp up the capacity further, to take the challenge of 27 and 28. So can we expect from the company maybe 6 months or 12 months down the line to further augment the capacity to meet the rising demand of 27 and 28?
I would say yes, definitely. Because you see, when the anti-dumping duty came, there was only 1 gigawatt of production in the country. And within 4 years, we had 17 gigawatts. So I feel that there is a lot of enthusiasm amongst the manufacturers and the investors also. So people will join their resources and they will definitely come up with the capacity. I personally don't see any reason why it will not come up.
Okay, and just sir, the initial question was on the competition. Apart from you and Visakha, who all are the other players who are also in the, we can see the competition?
So there is a company called Gold Plus, which is a very respectable player. They have 4 float lines running. They have set up one solar line for 300 tons per day. I think they'll come up with another one of 300 tons per day. There's Triveni Glass with 250 tons. There's Govind Glass with 150 tons. There's Emerge Glass with 300 tons. So quite a few people. And then, of course, Visakha and ourselves. So these are all respectable players who have been in the glass business for a long time. So this should be credible capacity. Plus new people who have announced.
Okay, got it. Thank you and all the very best, sir.
Thank you.
Thank you. The next question comes from the line of Deepa from Nivesh Online Securities. Please go ahead.
Am I audible?
Yes.
So my question is there any fundraise companies planning in coming future?
Ashok?
No, currently we have just completed the fundraise. So currently there is no plan. But in case there is some planning at a later stage, we will of course come back to the investors and shareholders. For the expansion which we are currently taking on hand, we don't think further funds may be raised from the equity, but it's all subject to board taking a call depending on the situation.
Okay. My last question is, how much budget company has parked for R&D in coming FY25?
So we have a complete R&D center which is headed by very senior technical people and with a strong team, and they are all engaged in various developmental activities for future as well as for the current operations. So I would think the current expenditure would be nearly 6 crore per annum on that activity.
Okay, sir. Thank you so much and all the very best for your coming quarter result.
Thank you.
The next question comes from the line of Rikin Shah from Boring AMC. Please go ahead.
Hi, Mr. Kirkar. So, in anticipation of this EDD, is it possible that the module manufacturers might have slightly stocked up in the previous months?
Yes, there is every possibility that they might have done it, except that you see the duty is already been applicable from the 5th of December. So any imports that have been cleared, the imports might have been made earlier, but if they are cleared from customs after 5th December, they would have had to pay the additional duty. So therefore, under the circumstances,
it is not likely that anybody would be spending money to just stock up for no good reason, because there'll be no advantage.
Got it, sir. That's all from my side. Yeah.
Thank you.
Thank you. The next question comes from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah, namaskar, sir, and thank you for the opportunity. Firstly, sir, what are our utilization levels currently for this quarter and for the 9 months?
We are running at a production rate of about 950 tons against our 1,000 ton capacity, and we are trying to ramp up production even more. So let us see what happens in the current quarter. We could be improving on the levels that we achieved in the last quarter.
And sir, what are the key components of the other income, and give the color on the same?
Abul Ashok.
Sorry, can you repeat the question, please?
My question is, sir, what are the key component of the other income? Other income for this quarter was at 15 crore rupees.
So other income comprises of certain incentives which we get from the government of Gujarat under the scheme of the industrial expansion, and these are in the form of various type of incentives. And then there is export-related income which comes as a part of other income in the standalone accounts.
And scrap sales.
Scrap sales.
Okay. And sir, as you mentioned in the early opening remarks also and during the answer also that the prices have moved up from 104 to some 144 number metrics which you gave. So taking into account that metric, sir, what would have been the revenue from operations for the December quarter had these prevailing prices being implemented? Since for the coming quarter, you are anticipating the average realization to move up closer to the level जहाँ पर आपकी duty का वो benefit आएगा. So what should be penciling in terms of the revenue moving up now with 95% of utilization levels?
Ashok, आप बोलिए.
Sorry, it should go by another 60 crores or so per quarter.
Okay, without any effect on the P&L expense side, as you told earlier that कोई भी आपका expense line item move नहीं करेंगे उस range से, that will straight go to the boss.
Production बढ़ाने की चेष्टा कर रहे हैं, तो to that extent तो कुछ तो बढ़ेगा ही. To the extent of additional cost for additional production.
नहीं सर, मेरा प्रश्न ये था कि आपने जैसे बताया कि प्राइजेस मूव्ड अप हुई हैं जिस लेवल पर बिकॉज ऑफ द इम्पोजिशन ऑफ एडीडी, इफ दैट रिफ्लेक्ट्स इन लास्ट क्वार्टर से हाइपोथेटिकली नंबर्स, द रेवेन्यू वुड हैव गॉन अप बाय 60 करोड़, बट देयर वुड हैव बीन नो इम्पैक्ट ऑन द पीएनएल साइड बिकॉज पीएनएल एक्सपेंसेस आर गोइंग टू रिमेन द सेम. So this would have directly translated to the bottom line. This understanding is correct, sir?
Yes, please. Your understanding is correct. It will translate to the profit at EBITDA level, yes.
At EBITDA level. At EBITDA level or PBT level?
Yes, both EBITDA, PBT.
Okay. And sir, now about the German subsidy outlook, sir. अभी सर हम क्वार्टरली क्या लॉसेस, लास्ट क्वार्टर में हमने क्या लॉस इसके कारण इनकर किया है, एंड गोइंग अहेड जो कूलिंग डाउन कर रहे हैं फर्नेस की, उससे जो इंक्रीमेंटल लॉसेस हैं वो किस लेवल तक रिड्यूस होते हुए दिख रहे हैं हर क्वार्टर के बेसिस पे, अगर आप बताना चाहें.
हमारे लिए ये पहली दफे इस तरह का कुछ हम कर रहे हैं, क्योंकि ये सिस्टम जर्मनी में हमारे देश में तो है नहीं. So we don't have an experience with this. So we are still paying about 23-24% of the salaries that we were paying to the workers. 63 to 67% is being paid by the government. Now all the expenses associated with running the furnace, which means electricity, gas, oxygen, etc., these have all stopped. The expenses of the workers have also stopped. So it's difficult to say I can't say that we made a very sharp calculation on that, because these accounts are maintained by the German subsidiary directly, and we normally get the figures at the end for amalgamation into our accounts. So I wouldn't be able to give any very cogent answer at this point on that question.
Okay. But do you have the fixed cost expense of running this German subsidiary on a quarterly basis or on a yearly basis, the fixed cost that you incur?
I'll answer your question.
Please.
The current losses which were happening at Germany at EBITDA level were close to 8 crores per month. Okay. And this way propose to bring down to less than half by virtue of this step what we have taken of short-time work and shutting down the furnace operations. We expect the EBITDA level loss to come down to almost 4 crores per month from 8 crores.
Okay. Yeah. Right. And lastly, sir, on the power and fuel line item, since you alluded to the fact of it is capital incentive, but power and fuel cost पे क्या rationalization steps हम ले रहे हैं जिससे इसका proportionate in terms of the cost line item can be reduced going ahead?
So
power and fuel mix भी है sir हमारा. हाँ sir.
Power and fuel we are already economizing by virtue of reducing or controlling the expense at the consumption level, and by increasing the productivity of the goods at the factory, this percentage is again going to come down. It has already come down in the last quarter compared to the corresponding quarter, but we expect it to go down further. Moreover, we are taking steps to install another solar wind hybrid of 16.5 gigawatt. Which will be under captive captive mechanism, which will again bring down the cost of power for us going forward from say July to September 25.
Correct, sir. Right, sir. Thank you, sir. I'll join the queue, and all the best to the team, sir. Dhanyavad, sir.
Thank you.
Thank you so much. The next question comes from the line of Vineet Gala from Xylem Investments. Please go ahead.
My questions have been answered. Thank you.
Thank you.
The next question comes from the line of Rabindra Nayak from Sunidhi Securities. Please go ahead.
Am I audible?
Yes.
Yes. Yeah. Sir, thank you for the opportunity. My questions regarding this. You mentioned that your turnover will grow up by around 60 crores if the current price is maintained and you improve the utilization. So, can we expect the entire, at least 60 to 70% will come to the bottom line in this fourth quarter?
See, we are trying to raise the prices towards the reference price, which is say 140 rupees or say 56,000 rupees. But as of now, we have not still reached there. So it is difficult to say that how much percentage will come. But whatever number we are saying is about 60 crores or so, we are aiming to reach that level very soon. Maybe it will happen on monthly basis from March. But on an average, January to March, it cannot reach the exact number.
Okay. But currently in January, have we seen this development in our financials, or it is still early to say something on this?
No, it's already happening. We are as we speak, we are close to 90% or thereabout already in terms of the increase. So there is a tremendous amount of rise in the price of solar glass after this duty, and it is inching towards the target number.
Okay. And secondly, about this reason for the closing of operation, cool down operation in Europe. So first of all, what is the realization where the dumping is happening, and what is our cost there, our price there in Europe, in Germany?
Actually, we already have an anti-dumping duty on imports of solar glass in Europe. So there is the selling price is not the issue at all. The issue is very different in Europe. The issue is the people who are manufacturing modules they have shut down their business. So there is no customer for us. So the customer list has dropped dramatically. Very few people are there. So the quantum of glass which we are able to sell to those customers is so insignificant in quantity, it cannot service a furnace of the size that we have. So that is the reason for closure, not because of selling prices, because the absence of demand.
Okay. You mentioned, some days you were mentioning that this glass is well acceptable in certain parts of Europe and some Italy, where the region is still it is not there, you meant to say?
Sorry?
Because this glass you are manufacturing in Germany has got some specialized character, so that is why it is well accepted in other parts of Europe. So still you are facing demand and from those regions also.
Yes, because the glass is accepted, but the person who is accepting the glass is not able to sell the modules at a profitable price. So when he buys the glass, he manufactures a module. There is no market for the module at the cost of production. So therefore, he has to shut down the business. So the demand has dried up.
Okay. And regarding you mentioned...
Revive, yeah.
Yeah, you mentioned that the 4 crores you will try to reduce the cost from 8 crores EBITDA to loss to around 4 crores. So what is the employee cost you have to bear in this 4 crores?
Ashok?
Yeah, it will be close to 2 crores. 2 crores.
2 crores. Another 2 crore will be the operation related issue.
Other fixed expenses, yeah.
Okay. And how long it will continue according to you? Because you have an operation there, you have bought the plant, and how long this thing will continue according to your understanding?
So Chairman in his speech has already clarified that we are expecting the German government to be formed, and once the new government is formed and they announce the policies, we will have to wait until then, because currently there is nothing possible which will turn the situation. So we'll have to have some patience for nearly 3 months now, and until then we will just process the current glass available and try to see that the expenses are minimized.
Okay. So, is there any plan if nothing will materialize? What is the plan we are thinking in our mind for this plant in Germany?
You see, the thing is this, that the European Union Parliament has already passed a resolution for the entire European Union that 25% of the solar energy which is used in Europe should come from equipment which has been manufactured in European Union. Okay. Now, because the last coalition government in Germany was a lot of dispute between the partners of the coalition government, they could not come to a policy decision on this matter. So, frankly speaking, the reason that we are continuing with it and all that and have not completely shut down the plant, because we think there are very good prospects of the new government which is elected to come to some understanding and some agreement on this subject. And therefore, in our opinion, there's a good chance that something will happen. But frankly, until and unless it actually happens, everything is conjecture.
Okay. So regarding this anti-dumping duty in India, so we have the government has come out with anti-dumping duty for the particular Chinese manufacturers. So is there any way, according to you, is available for the Chinese manufacturers to bypass this anti-dumping duty and dump in India? Is there any? You mentioned about this Malaysian thing. Now, is there any other mechanism available for the Chinese manufacturers to bypass this anti-dumping duty, according to you?
It should not be easy, because in Southeast Asia and Asian area, the only Vietnam, China and Malaysia currently manufacturing solar glass. So at this moment, it should be very difficult for them to bypass it. But we don't know. Everybody is very intelligent and everybody tries all kinds of tricks. So we'll have to see that.
Okay. So do you think that there are some enough idle capacity of glass is available in these regions, particularly in the ASEAN region, to have this bypass this anti-dumping duty? Is there availability? I'm just asking, according to you.
Quartz, you're saying quartz?
idle capacity. I'm just glass capacity.
Idle capacity of what? I know there is no idle capacity of glass. Only in China, I think there is idle capacity.
Okay. Thank you.
Thank you.
Thank you. The next question comes from the line of Nikhil Gada from Abacus AMC. Please go ahead.
Yeah, hi. Thanks for the opportunity. Sir, my first question is, can you sort of highlight the current capacity that is there of Indian manufacturers in India? I think you sort of mentioned that, we might see addition of 11 to 12 gigawatts. I was under the assumption we were at around 15, 16 gigawatts currently. Then when you said that we go to 41 gigawatts, I just wanted to understand the math here.
Ashok, आप बोल दीजिए.
Sorry, the current capacity is 15 gigawatt and another 15 are getting added in this calendar year.
Okay.
After that, another 11.2 gigawatt is under implementation from Vishaka and Borosil. So that will commission in 2026. So at the end of 2026, we expect this to be at least 41 gigawatts. That's the current status. If there is any other announcements which comes in between, that will also get added.
Understood, sir. So this 15 gigawatts that you're saying, the first level, that is going to come in this particular year, right?
Yes, this calendar year.
Okay. And then you're saying the next one will be in the calendar year 26, which will be V and Vishaka. Okay. Got it, sir. And sir, in terms of... So in terms of, this anti-dumping duty as well as CVD, while the Commerce Ministry has approved it, do we see any changes that might happen when it comes to the Finance Ministry or the government approving it? We might see some lower duty or something like that. How confident are we about, getting this approved?
Normally, the Finance Ministry does not reduce it or anything like that. We have not seen that kind of action in the past. But you see, we cannot make any conjecture whatsoever on what the government might do. Right. So we just know that the Ministry of Commerce has done it with final findings. They've given a very long order. They've given lots of reasons. So in the ordinary course, this should get approved. But until it gets approved, it's in the Gazette. Everything is open.
Got it, sir. And sir, just lastly, in terms of your overall debt and everything, so if we see currently, you mentioned that this 375 crore capex, some amount of it you will put it from the money raised, and I think the remaining you might take debt or something. So can you help us with how the overall capital...
The capex is more like 800 crores, not 375.
No, sir.
375 is what we are going to be funding from the money that has just been raised.
Correct. And the remaining money, sir?
Will be internal accruals, loans, debt as required.
So in that case, what kind of a debt profile we might look at for 26, 27? Number.
So Nikhil, we as a corporate policy, we would not go to more than 2.5 times of the debt EBITDA.
Okay.
Sorry, debt EBITDA, yeah.
Understood, sir. And sir, anything on the working capital side as well? Do we see, the working capital cycle per se improving because of all these measures?
Working capital cycle will slightly improve with the expansion because you don't need same amount of inventories for the purpose, but the credit to the customers is roughly the same, so which is a large portion of the working capital. So there may not be a very steep reduction in the working capital number of days.
Got it, sir. And sir, just lastly, you mentioned about the 16.5 megawatt solar wind sort of plant that you are planning for captive.
Yes.
What kind of cost savings do we see from this?
So we will basically be saving almost the same amount of capex what we incur, which is about 17 crores per annum, is what we will save out of this.
Okay, got it, sir. Thanks.
It's under group captive mechanism where the plant is owned by somebody else and we are the off-taker. And we pay into the equity of the SPV, which in our case is going to be 17 crores. And our savings are roughly 17 crores per annum.
And this is realized generally the moment of the capacity is started, right?
Yeah, that's the way it is structured, and there is a minimum return offtake and guarantees are also there assigned with it. So we expect the realization of the entire proceeds, entire savings. Currently we are already having 10 megawatt, which is also giving us the similar savings, whatever we had projected that time. This time even the PLF is going to be even higher.
Understood. Yeah. Understood. Got it, sir. Thank you so much. All the best.
Thank you. The next question comes from the line of Lalit from Amrut Trading. Please go ahead.
Thank you for the opportunity, sir. Am I audible?
Yes, please.
My question is, do we take the complete solar power project?
No. We just manufacture the glass and we sell to the people who manufacture the modules. So I'm sorry, we are not engaged in solar power.
Nothing like in further this forward integration and...
At this moment, it's not there, but everything is open in business, you know that. Right now, we are focusing on just expanding the production of glass.
Why I'm asking is that there is ample scope in solar project in India. And the industry is also booming. So might be...
Right.
My question was, we can think of that also.
Thank you so much. Thank you for your suggestion. We'll definitely look into it.
So who are our major customers who are buying these glasses from us? The major customer who are buying glasses from us?
Ashok, आप बोलेंगे?
Yeah. So all the module manufacturers who are present in the country are our customers actually. And we also have exports, certain exports are there. So basically all large and small players buy glass from us. And large players also have imports or they also buy from other competitors, producers. But basically we are present with generally all the customers.
Can you name a few?
Name you can take like say Premier Energies or Rajon Solar or say Tata Power or Coldly Solar or many others are there.
Oh.
Thank you, sir. Ladies and gentlemen, that brings us to the end of the question and answer session. I would now like to hand the conference over to the management for the closing comments.
Thank you. I thank all the participants for all the questions that they have asked. I'm very happy to see a reasonably good turnout in the number of people who have joined this conference. I just would like to close by saying that we have gone through a rather challenging period in the last couple of years. But there are fair winds ahead, and we can see with already from the 1st of January, there's been an improvement in our performance. And I'm sure that when we have our next earnings call in May, it would be with better results, and you'd all feel happy with your investments in our company. Thank you.
Thank you, sir. Ladies and gentlemen, on behalf of Axis Capital Limited, that concludes this conference. You may now disconnect your lines.